Broadcom stock, as you see, down about 5% in the pre-market. The company posting solid results in the latest quarter, but there is angst among investors over profit margins and whether the AI backlog is growing fast enough. Let's get more from Pierre Ouimet, head investment strategist at UBS Canada. Pierre, thanks very much. I know it's just one day, but there is concern that these AI plays such as Broadcom can maintain the pace of hectic growth.
Yeah, I'm a bit surprised by the market reaction. I mean, typically, I think, sometimes you react, you sell first and ask questions afterwards. But yeah, it was a beat. It was a clean beat. There is worries about margins. I guess their sales guidance was a little bit disappointing, though. So I think that's what's driving the stock down this morning. But I think it could be a little bit of an overreaction, a little bit like we saw in Oracle. We don't think the AI story is over by a wide margin. It's likely to continue. And so from that perspective, I think this is probably an opportunity.
I mean, I know that you wouldn't be buying AI stocks indiscriminately, but what about the NASDAQ 100? If you were to be making an index bet, and I don't know if you ever do that at your shop, I know, well, you can clarify. Would you be putting money into the NASDAQ 100 as a whole?
Well, we like technology, so therefore, yeah, that's clearly an index we'd be looking at. We do, from time to time, use some indices in our portfolios, but yeah, we think AI's got still a long ways to go in terms of its penetration, in terms of its economic impact, and it's not over yet. I mean, the markets go through these reactions from time to time, where there's a little bit of consolidation, and any small slip up is a reason to take some profits, because there are some significant profits in the area. So that's another thing. It's an area that's overowned. So from that perspective, there's always a risk that if something disappoints, even at the margin, then yeah, you're likely to see some weakness in these stocks.
But you don't see danger signs that we could be headed for a crash in these AI stocks?
No, definitely not a crash, but we could be in for some kind of consolidation, and I think that's what we're going through right now. But it's, I think, as we move forward, I think you'll see more opportunities in that area and growing opportunities as well. And on top of the fact that the technology is evolving so rapidly as well, that these applications will have a significant impact not only in the economy but socially as well. So it's I think the long-term outlook for AI is still very bright.
Yeah, I mean, it is interesting. It's like we're talking about steam engines early in the 1800s and kind of basing our predictions on what's going to happen when these things were tiny and fueled by coal. AI just getting going. Costco, it has been an investor darling. Anything jump out for you in the latest results?
Well, yeah, it's comforting to see these results because there's a lot of worry about the U.S. consumer, and this kind of continues to indicate that the consumer is far from dead in the U.S. And it was interesting also to see that the online sales were really what drove the quarter as well. So that's I think that's a good sign for some of our Canadian companies like Shopify, for example. So very robust numbers, and I think it's encouraging as far as the economy is concerned, the U.S. economy.
Oh, it's interesting. Costco has been sagging over the past year. I wasn't aware of that. Can you suggest why investors have grown colder on the stock?
Well, I think it's a general malaise vis-a-vis the consumer, and I think that's a little bit overdone as well. Yeah, there are parts of the consumers, the whole overall consumer picture that some consumers, a large portion of the consumer segment is not in a particularly good financial position, but most of the high income earners, the top quartiles of income earners continue to spend money, and it seems to be kind of the reality going forward here that those continue to sustain the economy going forward. Cuts in interest rates would help, but we'll see what happens in terms of further cuts going down the road here.
Give us your take on Oracle. That is certainly something of a fallen angel right now. Would you put money into Oracle right now, Pierre?
Well, a little bit hesitant in that particular case, but no, yeah, we'd be kind of waiting for They're waiting for some confirmation in future quarters of what the direction of the company and which direction they're going. So I'd be a little bit hesitant there.
We're hearing more than $100 billion US in debt, for example.
Yeah, well, the leverage is a concern, and I think they're trying to do everything in order to right the ship from that perspective. So that's a concern.
Anything jump out for you at the latest bank earnings results, Pierre? Because of course the bank stocks have been hitting record after record lately.
Yeah, well, the last quarter was very robust. I mean, you looked at just, the top line was up 7% across the board. And you look at profits before taxes and provisions, they were up, I thought somewhere low 20% or something like that. So, the net interest margins improved slightly. The provisioning wasn't necessarily a concern. And it looks like the coast is clear as far as the Canadian banks are concerned. So we'll see as we go forward here. But the thing is, these banks are relatively highly valued right now. So it's actually, look at some of the dividends are even below Royal Bank, for example, below 3%. So it's that's the same yield as the market overall. So there's a valuation concern there. And maybe I think we could probably see this area consolidate over the next few months as we go forward.
That's interesting. Yeah, I didn't know the yield on Bank of Canada or Royal Bank of Canada had gone so low, only 2.8%.
Well, it's what happens when stocks go up.
Yeah. But traditionally, you would hope for a richer yield than the market if you buy one of these things.
One would expect that. It's actually that's not where the yield in the market is right now. It's mostly in infrastructure stocks, some energy stocks. I mean, think of a company like Canadian Natural Resources, for example, a 5% dividend yield, which is it's unthird. I mean, it's kind of crazy when you compare it to a Royal Bank or some of the other banks.
Thank you very much indeed, Pierre. Great hearing from you.
Okay, my pleasure. Thanks.
Pierre Ouimet is head investment strategist at UBS Canada.